Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Jubilant Foodworks numbers will be flashing for you on your screen. I can see it in the exchanges, just waiting for the numbers to come. We're expecting a very strong set of numbers, and the bottom line has significantly come better than what the street was anticipating. The profit has come in, I think, at 68 crore, while the revenue has come in at 780 crores. So the top line also beats street expectations by more than about 7-8%, while the bottom line is a significant beat, 68.1 crore, which would compare with 6.7 crore a year ago. But compared to expectations as well, it's much higher. Not just that, there is a bonus which has been approved by the board in the ratio of 1:1. Well, the question is, the numbers are looking good. But the stock has already seen a big run-up. It's rallied 150% in the last 1 year, pretty much trading at record levels, very high valuation. How much of it is in the price? The street was expecting blockbuster numbers, and that seems to come through. The key number that we're awaiting will be the same-store sales growth, where I think a lot of analysts Mangalam spoke to or reviewed had expectations to the tune of about 24%, 17 to 24% was the expectation on the same-store sales growth. The stock right now is down 1% despite a significant beat in the profitability, a bonus in the ratio of 1:1. Mangalam, any more details?
No, the same-store sales growth number actually comes about 10-15 minutes later in the press release, so that is something we'll watch out for. But looks like the numbers are above estimates. I mean, there's no complaints as far as the numbers are concerned. We were working with a revenue growth of 22.5%. The company has gone ahead and posted 27% revenue growth. What's actually interesting is also the rent renegotiation perhaps seems like it's helping them, because if you take a look at revenue and the rent that the company's paid out, so rent as a percent of revenue year on year has come down from close to about 13% to 11%. That is something which is aiding the EBITDA even more, and a net profit which is much higher than what the street was expecting. In fact, we were expecting sequential decline in the net profit, 52.5 crore versus 66 crore that the company posted, but then the company has gone ahead and surprised positively on the net profit too. The stock is back in the green, but remember, it is trading at record highs, so it'll be interesting to see how much of these numbers are already baked into that pizza. As of now, the street is rejoicing the initial numbers. The same-store sales growth is the number we'll be watching out for, awaiting that number soon.
Yeah, and the same quarter in FY17 was actually the kitchen sinking quarter for the company, so that also should not be lost sight of. Importantly, to also see the sequential improvement, because momentum is with the company. They have a new chief leading them, so that too is something that will be worked out as well. In terms of the same-store sales growth, like Mangalam said, it comes with a bit of a lag in the press release, so we have about 10 minutes to go for that.
I think margins have come in at 16.4%. That would compare with 10% a year ago, and compared to expectations, it would compare to 15.6%. So 80 basis points higher than expectations on the EBITDA margin at 16.4%. The stock is now seeing a pretty good recovery from the lows of the day. It's up 1%, but from the lows, let's get the intraday up for you on your screen.
Absolutely, Rima. One more thing that really stands out, which I will be watching out for in the in the press release that the company puts out, is the number of stores that they've shut, as well as the number of new Domino stores that they've opened, because they've been rationalizing that. And out here, if I take a look at depreciation, year on year, depreciation has come down from 44 crores a year ago. It's now at 38 crores. Even quarter on quarter, it's seen a sequential decline, which means maybe the company has shut more stores than it has opened, and they are rationalizing their assets. Rent as a percent of sales coming down also speaks about the rent renegotiation. So those are things which are helping the company. And the EBITDA, of course, has been aided by higher revenue. It's a high operating leverage business, so higher revenue leads to a much higher growth in the EBITDA and operational performance. So those are a couple of things I'll be watching out for: the number of new stores that they've added, number of old stores that they've shut, as well as the same-store sales growth. So those are numbers we'll be watching out for.
And I remember a couple of years ago when Jubilant Foodworks momentum was on the way down, employee cost, an increase in the employee cost was one of the factors which consistently hurt the company's margins on account of delivery and the amount you have to pay for their staff. And that is one, the employee cost is something that the company has managed to maintain. They are looking to bring down their per store headcount and rationalize the employee cost. And even this year, if you look at the employee cost, unchanged on a year-on-year basis, and I think lower on a quarter-on-quarter basis.
Absolutely.
So at least holding on to that metric by way of a profitable, in order to shore up the company's
That's
profitability.
right, and looks like from the notes to accounts, they might not just sell the pizzas in India, they'll also, and they sell it in India and Sri Lanka already. Then during the quarter, they entered into a joint venture with Golden Harvest QSR Limited to launch Domino's pizzas in Bangladesh as well. So Bangladesh is another geography where Domino's pizzas will be delivering.
All right, so we'll keep our eye out on the press release. That's where we'll get further direction as to how the quarter has been for Jubilant Food. But for now, those are the numbers stacking up ahead of expectations, as well as a bonus issue on the ratio of 1:1. All right, with that, let's shift focus now to the technicals of trade. Ashwini Gujral now joins in. Ashwini, good afternoon. We'd seen the index dip briefly below the 10,700 mark, just off of it for now. What's your take on not just the index, but also the Nifty Bank?
See, basically, if you take the Nifty Bank out, you are down fairly seriously. And now the issue is that everybody is long on the Bank Nifty, and that is losing momentum. So my sense is you could lose further momentum, and maybe the Bank Nifty could lose 100 odd points from here, because essentially the market is not able to make any sort of headway post the highs that we saw on the Nifty. So Nifty is a bit more weaker, but I think if ICICI gives back a couple of percent, Bank Nifty could easily lose 100 points. So we are short on the Bank Nifty. Also, there are several banks which are weak. So IndusInd Bank is a sell with a stop of 1880, target of 1800. Yes Bank is a sell with a stop of 347, target of 330. And Sonata Software is a buy with a stop of 350, target of 365.
Ashwini, any thoughts on Jubilant Foodworks? It's rallied 50% in 2018, 150% in the last 1 year. Even today, it's seen a recovery from the day's low. Your thoughts on the charts?
See, it's not a great buy right now. You need the stock to correct. It is in a strong uptrend, there's no question about it. But given that such good results have a fairly tepid response, I would think the stock kind of is fully priced here, and maybe if it corrects, say towards say closer to 2450, 2500, that would be a better place to get in.
Okay, just some more mid caps, which are doing quite well. PTC, BEML, Concor.
See, these are stocks which have their time in the sun, but finally they come off. So PTC, the range here is about 80 to about 130. So slowly moving back. Overall PSU stocks are doing well for some reason. Oil marketing or power grid or BEML. But these are trading rallies, and probably once they are over, the stocks will come back again.
There's news that's just trickling in. Sapna is picking up some lines from a government official on ICICI Bank. We understand now that as a minority shareholder in ICICI Bank, the government could have sent a nominee to the board meet, but it's likely now that the government nominee may actually skip the attendance there. Sapna now joins in with more details. Sapna, go ahead.
Well, so this has been going around for quite some time, and a lot of questions are being raised as to why the government nominee is not attending the ICICI Bank board meeting for, whatever developments that have been happening during the last couple of weeks. Well, the clarity that has come in now, of course, is twofold. One is the government's role as in terms of corporate governance. Now, here the point is that since the government is a minority shareholder, barely not even holding 1% of the stock of the bank, the possibility always is that as a minority shareholder, your views may actually get overruled. Nothing stops the bank boards from doing that. So that is one aspect which the government is quite aware about. The second, of course, and I think that is a larger concern, they are still waiting for the investigative agency reports to come in. Either ways, whatever will have to be done after that. So in case there is an indictment as per the investigation reports, well, then the needful will have to be done. Government will act promptly on that front. But in case a clean chit is being given, then the government will actually go ahead and mark its presence in the board meetings and try and strengthen the board further. So the view here is very clear. As of now, the government is just observing the scenario. They are not really participating in the board meetings, and not very necessary to do that also as of now, for the reasons that I've mentioned. corporate governance, from that point of view, they are not on a very strong wicket because they're a very, very minority shareholder in the bank boards. The view can always be overruled. So they're waiting for the investigative side to get completed. After that, whatever needs to be done will be done. And also, as yet, no view has been submitted, at least in the written format, to the ICICI Bank Board in terms of what the government's views are or what is required or what is not required.
Okay. Thank you very much, Sapna, for that. By the way, keep your eye on Jubilant Food Works. Slipped again into the red, so from the highs, it's down close to about 2.5%. The intraday of Jubilant Food Works should be up for you on your screen. But let's keep the focus then on earnings. ABB India will be reporting numbers today. Anisha joins in with the key expectations. Anisha?
Well, good afternoon, Rima. Yes, for ABB India, the expectations are high and room for disappointment is low because remember, when Siemens came out with an inline set but disappointed on the order inflow front, the stock tumbled around 10 to 15%. For ABB, we already have a sense from the global company that the Indian order inflow, as far as the base orders is concerned, in Q1 was up around 18%. They also said that the large orders are progressing well in India, and hence we are expecting a good revenue growth of around 13% because remember, the company has the HVDC order that it is executing that is expected to go on unexpected lines, and that's the reason we are seeing a revenue growth of 13%. Other than that, a bit of margin expansion is what we are looking at, 60 basis points. Last year the base was a bit low. We are seeing a bit of improvement on that front. The profit is seen higher by around 30% to 117 crores because there's some other income that is expected, and that's the reason that jump in the profitability. But other than that, the key thing to watch out for is really the order inflow number, because we have been getting management commentary that exports are doing well, as well as 2018 can be a year of rebound when it comes to power orders, etc. So let's see how commentary comes out, but as of now, the expectations are high. Back to you.
All right, Anisha, thanks very much for that. Let's also get in some corporate voices. Then earlier this morning, we caught up with Praveer Sinha, who's the newly appointed CEO of Tata Power as well as the MD. He says that they're looking at selling some non-core assets in the renewable space, especially solar. He adds that losses at Mundra will reduce given the operational efficiency, though he hasn't outlined any sort of a timeline there. Hear him out.
There are certain things that we keep on doing internally in terms of how do you reduce the operational cost, how do you reduce the financing cost. So some of those aspects we are looking. We are also talking to the government and see that today the plant produces at 80% because if we produce more, we lose more money. So is there an opportunity for us to produce more quantum of power and the additional quantity gets sold at the market rate? So that we do not have a hit on them. We are looking at optimizing our O&M cost, optimizing the financing cost, maybe get an opportunity to sell the additional power at a market price. We also keep on looking at some of the other non-core activities that we have. Like we have a stake in Nelco or we have a stake in Tata Projects. So these are opportunities we keep on looking at. At the right time, we will take a call whether we would like to divest or we would like to continue, depending upon how they perform and what sort of returns we get as a promoter. Renewables is a focus area for us, and we are looking at expanding in renewable space, especially in solar. We are about 48,000. And we expect that with the deleveraging that we are doing, especially selling of the non-core assets and some of the other receivables that we are expecting from our investment, we should be in the range of about 40 to 42,000 crores.
Okay, let's get into a short break on that note with the news that while the benchmark indices are just down about 0.1%, the mid-caps are underperforming quite a bit, so that index has lost close to about 0.5%. Further weakness visible in PC Jewelers. You've got additional cuts coming through as we speak in names like A. Sri Renuka Jain Irrigation. Get into a break and come back.
Jubilant Food, the same-store sales figure is out and it's a 6-year high, 26.5%, which is actually highest than what any of the brokerages were expecting. Mangalam, what's your take?
Absolutely. 26% is something that wasn't on the street. There were whisper numbers doing rounds and all of that as well. They were mid-20s, thereabouts. thereabouts, but 26.5% 6-year high, that is something that the street will take with both hands. More importantly, I'm looking at the store opening as well. They've opened 7 Domino's stores. At the same time, they've closed 8 Dunkin' Donuts stores. So that is what explains the sort of move that we're seeing in the company's operational profits. The net profit too, the highest that the company's posted in at least 13 quarters. Same-store sales growth of 26.5% is pretty phenomenal, must say that. And the company's posted an EPS of 30 rupees for this year. Consensus was expecting an EPS of 60 rupees in FY20. Is there a chance that maybe the company can go ahead and beat those estimates as well? Then that could cause for a bit of a re-rating on Domino's. The stock has seen a stellar rally. The stock is at a record high, and currently as we speak, it is at the high point of the day. 26.5% same-store sales growth is something that is higher than most optimistic estimates on the street of about 24% as well, and the street is taking it with both hands.
Okay, some more details. The company added 7 new restaurants in Q4. No restaurants were closed in the quarter, and 1 city was added, which means the net new addition in stores was 7 in terms of Domino's. That's the Domino's stores.
Dunkin' Donuts, they've shut 8 stores, which was the bigger.
And added 1.
Yep, that was the loss-making business. So from this in Q4 FY17, there were 73 Dunkin' Donuts stores. Yeah. That number has come down to 44, and that is where the company is saved on a lot of costs.
Dunkin' Donuts, right. There's a commentary from Prateek Putta, the CEO, who says that they've halved their losses in line with their stated commitment. And also, this time around, the same-store sales growth has been driven by, the launch of their all-new Domino's, everyday value, sharp focus on digital. And that's something he says that they remain focused on for the future as well.
And what's an interesting trend, actually, I'm looking at their online order to delivery sales as well. That one's happened, that one's grown from 51% to 63%. Mobile ordering to the total revenue, that proportion has also moved higher. So people are ordering more on their mobiles. People are ordering in much more. From 51%, the ordering in has grown to about 63%. So internal is looking fairly strong, 26.5% same-store sales growth, led by lower value pizzas, the new pizza range, as well as the delivery extension hours in Maharashtra. Pizzas can go up to 3 a.m.
Okay, and the key focus area for the company is to drive Dunkin' Donuts to break even. In the management commentary, we learned that they've managed to halve their losses in Dunkin' Donuts, and one of the key focus areas for the company going ahead is to break even, reduce the impact of the losses. But so all in all, very strong numbers coming in from Jubilant Food Works. The same-store sales growth at 26.5%, a 6-year high. A beat on revenues, margins, as well as profitability, and all-round performance coming in from the stock. But I guess part of the good news was already in the price. The stock right now is up close to about 1%. But good day, you would say, Mangalam, for all the companies that you've been tracking. Godrej Consumer too. The Q4 was in line. What could be the reason why the stock is up so much?
Well, the reason was the management commentary, because if you just take a look at the numbers, the revenues were 30 crores shy of our estimates. Even the EBITDA, actually, that one came in a few 5-6 crores below our expectations as far as Godrej Consumer is concerned. And the net profit, that one was boosted by an exceptional gain of close to around 194 crores. The volume growth, that came in at 6%, lower end of our expected range of 6 to 8%. The key products that disappointed, that was the household insecticides business and the hair care business. The soap business was actually up 19%. Indonesia did not do too well, but the management commentary, that one was fairly positive. They expected a strong turnaround in 2019, led by the new launches that the company is going to do, as well as innovative pipeline that they have on their on the board. So that is something that the street is taking heart from, and maybe ignoring these no fireworks sort of numbers in this quarter.
All right, Mangalam, thanks very much for that. Let's also get into market opinion. We caught up with Inderjeet Bhatia, the head of research at Macquarie, this morning to talk about how the earnings season has panned out so far. And he says that he expects low double-digit earnings growth going ahead, adds that the upside in ICICI Bank could actually be significantly higher.
The earnings have been reasonably okay. Nothing great to kind of talk about, but no meaningful downsides also emerging. So it's kind of more of a sideways earnings that we have kind of got till now. Obviously, there are expectations which are much more elevated for FY19 and then going into FY20. So I think we'll still continue to hold on to our view that we can get a very low double-digit earnings growth in FY18. Year-end target is 11,500. So it would expecting it to kind of get into that new high zone. But again, the upside from these levels seems to be fairly limited. If the company were to achieve its guidance of 15% ROEs next year, our sense is that adjusted for the subsidiary valuation, the stock is trading at somewhere between 1.1 time to 1.2 time price to book. Given its very, very strong liability franchise, technology leadership, we believe that the valuations are fairly attractive. So ICICI Bank is clearly one of our top picks in the entire banking space. And we think as these issues get sorted out, the upside could be significantly much more from what we are seeing right now.
Okay, some more stocks you should keep on your radar. You've got DLF, which is moving up quite smartly. So that stock has gained close to about 3% Inox Leisure continues to have a strong session, a rally of 7.5% on that. It's the ad revenue growth at 59% in the quarter gone by, which excited the street quite a bit. And even as we speak, that stock is gaining ground. In numbers which just came out, in case you missed it, it's Jubilant Food works an all-round beat. Same-store sales growth at 26.5%. The company's announced a bonus in a ratio of 1:1, and the company is seeing increased traction in their digital offering, which is helping in their sales as well. So that's a stock you need to keep on your radar. Exide has hit a fresh 52-week high on the back of a margin beat. The stock started the day a bit subdued, but since then has moved up quite smartly, so now up close to about 1.5%.